After the financial meltdown at the end of 2008, there's been a lot of talk about institutional investors, and there are many people in the public who feel like, all right, there's these secret groups of big companies or traders or something that are making things happen in the market, and that the little guy, the normal investor, really doesn't have a chance to compete with them. So first of all, let's just define what an institutional investor is. There are many different types of institutional investors. There are endowments, university endowments. There are hedge funds. There are private equity funds. There are mutual funds, for example, are institutional investors. And then, of course, very, very wealthy individuals. A Warren Buffett or a Bill Gates, they become an institutional investor on their own. They can't just go out and buy normal things the way that regular investors do. To a certain extent, I do believe that individual investors can't compete with the institutional investors. And when I say that, it's not because I have some sort of conspiratorial theory about the markets, but rather investing is a difficult thing, just like, Major League Baseball is a very difficult thing. If I tried to go on the field and hit a Major League fastball or Major League curveball, I would have almost no chance at being successful. Well, the same thing is true when the individual steps in and tries to buy and sell stocks or work off of hot tips or whatever the case may be. You're competing in a world with people who are better trained and who are much better at what they do. Now, that's one of the advantages of mutual funds. That's why you'll hear me say that until you have $10 million or $20 million to invest, you shouldn't be buying individual stocks. You should buy mutual funds, because with a mutual fund, when you take your money and put it in there, it's not just an entity unto itself. It is a pool of money that is managed by a professional investment manager. And those people who run the mutual funds are trained. They have years of experience of managing money. And so when you put your money into mutual funds, you are getting the benefit of an institutional investor. You become invested alongside those people instead of betting against them. And I think that you're much better off to do that.